Institutional Sales at Ambit Capital joins us now. Pramod, hi, good morning, and thanks for being with us. We have the big Q lined up this week, which is the RBI policy. Expectations are that the RBI will cut by 25 basis points. But if that happens, do you see a relief rally in the markets, or do you think that the market would continue its downward trajectory because of the global volatility?
Yeah, I think the short term is that much harder to predict, but I guess there will be some sort of a relief. But like you said, it is sort of a general expectation across the market that there will be a cut. To that extent, it may not surprise the market that positively. So whatever relief rally could be short-lived, and the global cues or the global factors at play would continue to drive the markets.
It is so short, Pramod, that it started off with a 0.5% gain, and the Bank Nifty is already now 0.25% in terms of its gains. So it's knocked off 0.25% in 15 minutes of trading. So it's rather a short, long trade that appears to be playing. Chances are the governor is going to give the cut, but say that he will be entirely data dependent and cannot promise or cannot commit to further cuts. Something on those lines. In which case, how might the market react?
I mean, that could be a bit, that could put the markets a bit back, because I think every data point clearly suggests there is a case for a cut. If you leave the global factors out of play, just the domestic economy, be it in terms of inflation or slowing growth, one way or the other, there is a case for continuous cuts to boost the economy. Beyond that, if the governor sees anything else coming from the global economy which merits a pause, and that he weaves that into the guidance or the commentary around it, then clearly the market can react a bit negatively.
Okay. How are you approaching individual sectors now? Pramod, what is your sectoral preference for the next 3 months, and what would you avoid now?
I think the focus will still remain on the exporters and some defensive sectors which have at least some visibility of earnings growth. Unless we see any meaningful recovery in the domestic economy, we'd continue to focus on defensives and exporters. So to that extent, pharma and IT would be right up there. Alongside, I think we can look at the consumer staples space, which do have some visibility on earnings growth.
Okay, Pramod, how have you read the Chinese data that just came, the industrial profits contracting by 8.8%? It's a fairly big negative hue that we are seeing in Asia. What's the sense you're getting? Are we going to get further negative vibes from global investors?
Yeah, I mean, indeed, it's something that investors globally are trying to grapple with. How bad is the situation with China? Clearly, there's a transformation underway there from an investment in the export-driven economy to more domestic and consumption. Now, what sort of changes, what sort of implications that has, both in terms of the short-term and long-term, to be honest, not many people are able to grapple with, particularly given the lack of reliable data available. To that extent, the uncertainty should continue. Implications on the global economy, particularly with the situation that the Fed is in terms of a potential rate hike, could create more volatility in the market. So I would expect investors to look towards safe havens, pull money out of risky asset classes, and that's the way to defend volatility in this situation.
So what could the upside be capped at, you think, Pramod, for this market because of the reasons you alluded to? I mean, so far the Indian markets are down 5.5% this year already. What do you see the upside as, say, in the next 6 to 12 months?
I mean, it's hard to see much upside from a short-term perspective, given the number of moving parts that we're dealing with. If you leave aside the global macro and just focus on domestic earnings growth, I guess we're looking at an earnings growth of somewhere between 5 and 8%, and that's the sort of upside we should see for this market at best. But then the other critical variable in determining the upside, which is the multiple that global investors would be willing to ascribe to a market like India, which clearly, despite all the positives, falls bang in the middle of the emerging market asset class, which is not really a favorite in today's world. So that multiple could be in danger and could cap this upside from these 5 to 7% levels as well. Unless and until the biggest change that could happen is domestically, where we are seeing some significant action by the government to boost the investor sentiment, and also some sort of investment activity which can boost profits going forward.
Okay, Pramod, if we are going to get clubbed with emerging markets and with the China sword hanging and data continuing to disappoint, do you think that the 7,500 which the market touched twice and bounced back is not all that sacrosanct? We can pierce it. What's your sense about the downside?
No, absolutely. I don't think anything is sacrosanct given the way things are moving in markets globally. I don't think 7,500 is anywhere near the base. Things can get uglier as we go forward if data points such as today's continue to come through from this part of the world, or the Fed rate hike decision is not seen particularly well by investors. Then the sort of turmoil that we could see for risky asset classes like emerging markets could be bad. And despite the sort of immunity that we have, we don't think we'll escape that sort of a downside. So I would sense it could go much below 7,500.
Okay, Pramod, just a brief interlude. We have to. We're going to see a huge development. How would you approach this as an investor at all? Is MCX the only stock you'll play?
Yeah, I mean, clearly having a more capable or rather experienced regulator is definitely good for an asset class, and you could have built the case for this several years ago, actually, given the integration of the securities market and the commodities market. So it is definitely positive, not just from the market perspective, but also from the broader economy, given it gives an option to genuine investors or traders to hedge their business risks. So to that extent, there are many ways to play this. At this stage, I think MCX is the more relative straightforward opportunity.
Okay. Well, you were telling us earlier about the fact that this market could have a deeper downside below that 7,500 level as well. Which are the one or two sectors that you think could lead it there?
Clearly, I mean, the cyclicals, rate sensitives are going to lead the charge there as investors try to find safe havens in more defensive sectors. So any sort of downside risk will have to be led by financials or industrials names where we're still struggling to see some sort of or any visibility of earnings growth, really.
Okay, there is this huge digital India push that the Prime Minister is giving, and his presence in Silicon Valley as well has attracted all the big, best and the brightest in Silicon Valley. Does that change the list of stocks you are looking at, IT itself or the digital play? How should an investor approach this whole event?
I think IT is perhaps what they call the first level thinking in terms of implications from this development. This development is much broader than just IT. I think there are several examples in different sectors which are implementing digital initiatives and reaping the benefits through efficiency gains and flowing through return on capital. Banking particularly has a huge role to play here, where the use of technology can reduce their operating costs quite significantly and also enhance their market breadth. So this is not simply restricted to IT. I think the economy in general will benefit from it. The more advanced companies which can use these technologies ahead of the curve will definitely benefit more than the others.
All right, Pramod, we leave it at that. Thank you for joining us and giving us those details. So that's a slightly cautious view coming in from Ambit. They believe that there could be a downside to this market beyond the 7,500 level as well.